Well, it's been a very tumultuous week. Actually, it's been a very tumultuous first quarter of 2022. We're going to talk about strategic real estate investing, particularly in these kind of times when things are in flux. We're going to talk about the regions of the country where most investors should probably be putting their money. We're going to talk about the property mix, what type of properties we like, and we want to talk about leverage. Now, you've heard me talk about it's not how much money you have, it's how much income do you have each and every month. What do you get every single month that you can spend? Now, when you get ready to retire, you're going to go see your financial advisor. They're going to talk about the Bengen rule or the 4% rule. And if you're in any of the big stock brokerage firms, the big equity houses, they're not going to want you to take your money out because that's called assets under management. They're going to talk about you depleting your assets at 4% a year for 30 years. And your nest egg is going to deplete. And if you outlive your money, say you've had a really good life, you're in great health, well, it's very, very possible that you can literally outlive your nest egg. After 30 years, it is gone. And here's the shock to people is that you are going to live a lot longer than what you think. You could easily live to 95, 100. I'm thinking my wife could easily live to her low 100s. So we're going to be living in retirement for a lot longer than we thought. And we need to prepare for that. Now, one of the videos that I would highly suggest, because this is a true story, is 81 and Broke. It's on my YouTube channel. We'd love you to take a look at that if you haven't seen it before, because it's a very tragic story. It's very, very similar. My suggestion, of course, is to find an asset that grows, that's an inflation hedge, and throws off cash flow. It's kind of a tough order, but what we have found is that real estate really, really fits that bill. And of course, it's an incredibly compelling investment. Now, we talk about accumulating real estate, and of course, we want to talk about maybe finding an entry level, because that's the market that we personally like. Now, you may want something different. There's all kinds of different asset classes within the asset class. My personal favorite is entry level because it appeals to the widest range. The market class, you can always rent them, you can always sell them if you need to sell them, and you can always find tenants that can rent it because it's kind of in the lower end of the scale. If we ever get into trouble, here's a thought, is that you have A properties, which are at the top of the line, and you have B properties, and you have C properties. But if we get into an economy that's kind of soft, you're going to see tenants migrate from the very best properties down to those middle properties, the middle properties down to the low properties. So if you're in an entry level, you're generally very, very safe and conservative in all marketplaces, so we like that. So an entry-level property, a 3-bedroom, 4-bath, 3-bedroom, 4-bedroom, 2-bath, 2-car garage. We're finding that developers are putting properties on much, much smaller lots, so the bigger the lot, the better. Certainly we want a single-family lot. We want a room in the backyard, put a swing set or a sandbox. We want the kids to be able to ride their bicycles out front, throw a ball. We want our tenants to sit down and make our rentals home, and you're going to find that these tenants are going to stay there for 5, 6, 7, maybe 10 years. I've had them stay even longer. And we're going to suggest to use a property manager. Now, when you retire, maybe this is something that you want to do. We always say when you retire, you should go do those things that you like. And if painting is what you like, you go right ahead and go paint. But we're thinking of painting in France or painting the Eiffel Tower or the Louvre. Oftentimes people think that they don't want to pay any money for a property manager, and they're going to do it themselves. We highly recommend that you get a property manager. Now, property managers are very, very inexpensive. They're just dirt cheap. Now, here in Metro Phoenix, I'm sure this is probably carries over to many of the other marketplaces. You can get a property manager anywhere from $65 a month to about $110 or $115. And keep in mind, they are a tax deductible item. It's a business expense. So Uncle Sam is paying a large portion of that fee. So why on earth would you not do this? Having a property manager just frees you up to do whatever you want to do. You can go anywhere in the world and they will send you a check. They'll take care of the property. They'll do the cleaning, the painting, take care of any repairs. They'll handle any tenant issues. They'll find you a new tenant and then they'll just send you a check. It's just a great, great program for you. Now, if you decide to use a property manager, I would go to where the population is going, because we have some very, very definite demographic shifts that are going on, and these appear to be decades-long demographic trends that are just going to go on and on and on. And the population is going to Arizona, Florida, and Texas. This is going to be where people are leaving the high tax states, going to the low tax states. Here in Arizona, we just have a flood, an exodus of Californians leaving California, coming here to Arizona. They are so tired of the high taxes, the high regulations. They're tired of social issues. Now, here in Phoenix Metro, these people from California can buy a property for a third or maybe even half. And you can get a bigger house, a nicer house, a newer house, a better neighborhood, better schools, better transportation. It's sunny here 330 days of the year, a great place. And of course, the growth here is phenomenal. So this is a trend. We are seeing people leaving California, and they're not just leaving California, they're leaving all along the West Coast. They're leaving out of Washington. Lots and lots of people coming out of Seattle. It's just amazing. People leaving Portland, coming here. An awful lot of people leaving Chicago and Illinois, Wisconsin, Minnesota, a lot of Minneapolis people, and they're leaving for Arizona. Now, this is on top of the fact that we have demographics from retirees that have been going on for 40 years. You know that Phoenix, Arizona is one of the great meccas for people who are retiring. We just have a huge population growth. So why not invest where people are going and just put your money where you're going to get the greatest growth? One of the acquisition protocols that we have is the property needs the cash flow. If you don't get cash flow, there are very limited reasons as to why we would buy this property. We have clients that have been with us 10, 15, 20, 25 years. That's kind of the rule. It's not necessarily the exception. We want our properties to cash flow. Not only do we want them to cash flow, we also want them to grow our cash flow. We want that cash flow to keep going up. Now, you're going to find all across the country that rent is going up, and of course, it's staying pretty valid right along with inflation. Once you get into the growth markets, though, you get a boost on it. You get organic growth on top of inflation, which means that you get a really very nice growth component. And you're going to see your income grow, and of course, value of the asset grows right along with that. So you get two ways. You both get income growth and appreciation growth, and you get taxes, of course. And here's, again, what we're looking for our properties is we like to limit the amount of debt that we have on them. If you remember Phoenix, you can't hardly forget that Phoenix was at the epicenter of the debacle 12, 15 years ago in 2008 and 2009, and people lost their properties. The people who lost their properties were speculators. Those are the people that were highly leveraged. They were buying the properties just to be shuffling back and forth, making a quick buck. But those that bought the properties as purpose-bought rentals to give them cash flow, used those properties as a lifeboat because the income kept coming in month after month after month. It never faltered. People always need a place to live. And even though those people that own the properties, they might have had problems with their personal business, but the income from the rentals never did, and that supplemented their business. So instead of it being a problem, it was a blessing for people, and that's what we look for. We want our properties to be a lifeboat. If we get into any kind of turmoil, we want the cash flow coming from our rentals to supplement our lives, and so our lives can go on unaffected. That's part of our program. We want to get these properties free and clear or have very low debt. So we'd like you to talk with us, talk to your financial advisor. We can actually do like a Zoom call, put us all together. We can do a conference call, see what's best for you. But we acquire these properties as purpose-bought rentals. Now, we have a pretty good group here. We talk about the fact that every property in Maricopa County is certainly going to rent, but that doesn't mean every property in Maricopa County is a good rental. We have an acquisition protocol so we can boost the ROI, boost your appreciation, boost your capital gains, and make sure we can do the maximum we can to get the highest amount of return for you. And therefore, we're only buying good rentals. And we like to talk to you about that. So you're welcome to reach me at michael@michaeldeville.com. Also, please subscribe. If you like what we're talking about, you're welcome to make comments on our videos. Not only does our model rental and our model asset that's throwing off cash, it needs to adjust to inflation. Inflation, of course, is in the news. One of the best inflation hedges that you and I can get on Main Street is going to be a single-family home that we can use as a rental. You know, it's made out of all the commodities. You know, it's made out of lumber and oils, making the carpeting and the plastics and the asphalt shingles. We've got metal in the property and glass. All those things are made out of commodities, and as they go up in price, our properties go up in price as well. And if you're in, like I've mentioned before, if you're in one of the great markets of Florida, Texas, and Arizona, you're going to get a boost for organic growth as well. But if you're not, if you're just going to do this yourself, a single family home is going to give you one of the greatest inflation hedges. And we've been talking about the fact that you need to protect your purchasing power. We've been talking about that for years, and now you can see what we're talking about just in the news. I think today, this is April, that they've come out and said the inflation rate is at 8.5%. That's pretty doggone significant. It's going to really impact people's purchasing power. It's not going to bother us too much because our properties are staggered, and as inflation comes, we just keep raising rent and we maintain our lifestyles this way. But this is an added bonus. Shelter is certainly going up as if rent inflation. You know, I'm an author. My wife and I put together a business plan, and we have been very blessed for the last 30 years. We've had a very, very nice life. This is my business plan, is how to create a real estate money machine and retire with income. It is exactly what we're talking about. How do you create a machine that just sends you income month after month after month? It's very passive. You don't have to be around. You can go do those things that make your life meaningful. You can travel, you can teach, you can create, you can become an artist, a dancer, a singer. But you don't have to worry about making any money because your properties are going to make all that money for you. Now, we'd love to get your comments. You can reach me at michael@michaeldeville.com. We'd also like your business. My team is in the real estate business here in Phoenix, Arizona at West USA. West USA does our paperwork, does our compliance. They're a $5.4 billion firm. They're like the 16th largest in the United States. You should feel very, very comfortable doing business with them. And we're very, very good at what we do. We'd love to have your business and acquire these properties for you. You're welcome to do a conference with us. You're welcome to do a Zoom. And if you need to reach me, you're welcome to reach me at 602-942-4200 if you want to talk to me, or you can email me at michael@michaeldeville.com.